See, if I didn't hit the record button right there, I would be getting an interesting phone call from Ashley in a few minutes. That would be an interesting call. So I don't
Always
I don't
keeping it
want to be
straight.
I don't want to be on the receiving end of that call. Okay, so we're recording now. So let's get some housekeeping items out of the way. So first one is, yes, obviously this is being recorded. Okay, so we're going to record this. But keeping with that in mind, I want you guys to keep in mind that this is GoToWebinar, pretty stable company, pretty stable software package. Every once in a while, the recording, it just doesn't work. Okay, so it's wise of you to pay close attention, put away the cell phone, close the email, get your notepad, etc., and your pen, and take some notes, because in the event that this doesn't record properly, then at least you've got the notes that you've taken and stuff in your memory. Don't worry, you're going to be contacted by people from Angel Oak as well. So with that, keep that in mind. Also, there's a questions box somewhere on your screen, a GoToWebinar box, where you can click in there and you can chat, or you can ask questions, that type of a thing. Here's what I'm going to ask you is to do this. To get started with Angel Oak is very easy. You simply go to their webpage. Tom's going to show you that at the end of the webinar. However, I understand that this is the mortgage industry. I do get that from time to time, nuclear bombs fall out of the ceiling into your lap and explode, okay? In which case, you're not going to be able to finish watching this webinar. So what I would suggest, though, is if you see that bomb dropping and you know that it's going to explode and you got to get out of here, but you want to get started, type into the questions box, "Get me started." And then that way, one of the reps from Angel Oak will reach out to you to start getting you going down this process. So we want to make sure that happens. Trying to think if there's any questions. Now, with that in mind, in the questions box, go ahead and ask your questions. Just fire away as we're going through the webinar, so you don't forget to ask it, but ask it. I may, from time to time, stop Tom and Chris in the presentation, say, hey, somebody's got a question, but more than likely, I'm going to wait to the very end to field our questions at that time. If your question doesn't happen to get answered live here because of time restraints or what have you, or maybe you wrote a paragraph for a question, which happens, okay? Don't worry, it'll get answered directly by an Angel Oak rep sometime after the webinar, maybe tomorrow, something like that. So they'll reach out to you directly. So with that, I think that we'll go ahead and do the introductions. Again, I'm Frank Array, National Real Estate Post, here with Tom Hutchins. He's the Executive Vice President of Production over at Angel Oak Mortgage Solutions. And we have Chris Philman, a real live loan officer, on the call as well. And so he's going to be talking to us about some stuff that he's doing on a street level regarding exactly what this webinar is about. So that's who we are. With that, guys, I think now that everybody's seen us and had a good look at us, they're probably tired of looking at us all at this point. I know I'm pretty tired of looking at the both of you. So I think what we can do is we can kill our video camera just to make sure that the presentation flows smoothly in our audio. So if you guys can just both click off your cameras, I'm going to click off mine. And Chris is hunting down the little camera button to click his off. Do you see it, Chris?
See that button, Chris?
Because what would be funny is if we did the whole presentation, but there you go, you got it. It'd be neat to do it while Chris just staring there. So with that, the presentation screen is up. This webinar, guys, is earning residual income in the mortgage industry. And with that, I'm going to pass it over to Tom, who will also include Chris, and say, take it away, guys.
All right. Thanks for the intro, Frank. And thanks, everybody, for joining us. Happy holidays to everybody. And Frank already kind of rolled out some ground rules, but truly ask questions. And if we can't get to them today, GoToWebinar will maintain those questions and we'll get back to you with answers. Can assure you of that. But anyway, hope everybody's having a great holiday season. I think the timing of this is terrific because non-QM, it really needs to be part of your 2019 plans. And it may already be in your plans, but we hope we can share some information today that's going to help you actually implement and execute on your plan, especially when it has to do with non-QM. So, Chris, anything else from an introductory standpoint?
Yeah, thanks, guys, for having us. I mean, you guys have made a pretty big impact on my business with your, non-QM products. So I'm glad to help my fellow loan officers out there nationally. And as
Yeah.
you said, happy holidays. And, let me see what I can do to help you with these scenarios.
Chris, just so everybody knows, how long have you been closing non-QM loans?
Well, I've been in the business since 2001. So,
Yeah.
pre-financial crisis, we had what was known as subprime back then, or Alt-A. And, once the financial crisis hit, everything dried up. And as soon as I knew that you guys were coming back into the market with this product, I knew I was going to be watching you guys, because some of the products that you all have really put arrows in your quiver that you can't get anywhere else. And it's certainly helped my income and my family's future. And, I would say specifically with Angel Oak, your all's product has been on the market since 13 or so. And I've been strongly pitching it ever since then.
Yep, you were absolutely and have been an early adopter, and so that's why I'm excited to have you here, because you've kind of been through this, and you have what I would call a more mature non-QM business, and I'm sure there's a lot of people that are on this call who want to get to that point, and I think we're going to be able to show people ways to do that and to make it part of your business. So
right,
let's just jump into it. How about that? So we're going to talk residual income. That's really why everybody has logged in today, to learn about how to use non-QM to generate residual income. We're going to talk about a few scenarios, some best practices that will be terrific to hear from you, Chris. And then we're going to just show some online tools that we've made available for everybody on this webinar to help you jump in, so to speak, and get going today. So let's do it. So residual income, I think I've always heard people talk about one negative about the mortgage business. You compare it to like the insurance business. You always hear people they get residuals every single year, and how do you turn your mortgage business into some type of residual income? And we've got some visuals here, but we've got a month, we're in the month of December, but come January 1st, we're back to zero. And that's what everybody experiences in the mortgage business. But this is kind of where non-QM can really help somebody build an ongoing residual business. And so let's just kind of walk through that, Chris. So you close a portfolio product, but when we say that, we're referring to non-QM. You close a deal.
Right.
You set a calendar reminder when that borrower's situation would warrant some type of refinance opportunity. They have seasoning from an event, whatever their situation is. You set that calendar reminder. And Chris, how do you do that? Do you have some type of really high tech CRM that does that for you, or how do you do it?
Well, I do use Salesforce to an extent, but then also, I know everybody has different LOSs they use. I use Encompass, and I primarily almost daily run a report of what my pipeline looks like as far as what's closing for the month, what's left to close. And of course, in that, I've got cataloged. All of that's really kind of organized by close dates, right? So one of the things I'll do when I'm exporting that to Excel, I'll go back previous years and I'll take a look at, I can see who closed, the month of January 2016, the month of February 2016 or 17, or whatever that may be. And one of the things with that too is I can see what product I closed them on. So when I'm reviewing that Excel spreadsheet, I oftentimes can kind of say, okay, yeah, this was a Port Select that I closed 2 years ago. I need to take a look at that, because if the event was, say, we needed to go with that product because of a Chapter 7 bankruptcy, well, we're 2 years from that now. That's somebody that I could actually reach out to and put them in a conforming type situation.
Right. Yeah. And that's awesome. So you kind of stay on top of your pipeline. I've also talked to some other loan officers that use Outlook or just any kind of Google Calendar. Just use a calendar feature. So when you're closing that loan this month, you're kind of knee deep in it. So when that borrower is going to be far enough away from that event, going ahead and putting that on your calendar to call that borrower in 18 months or 2 years or whatever the case is that specific borrower. And, I don't, it's awesome to use Salesforce. That's a great tool, and Encompass and exporting. I think, you really have to kind of figure out what works best for your business, but it doesn't have to be too complicated. Wouldn't you agree, Chris?
Yeah, I would. I mean, I set calendar reminders as well through Outlook. I think using as many modes to remind you of that callback, so you can actually not only provide them a better loan in the future, or maybe a better loan that suits their needs. It kind of allows you to be a winner twice, because oftentimes if you're providing a non-QM loan solution to somebody buying a house today where otherwise they couldn't buy, you could also give them the exit strategy of getting to something that might better suit their needs in the future. Right.
Yeah, no, that's a great point. It helps you kind of push them along initially, doesn't it? Because they know that there's something down the road. This is not a we use the term of Band-Aid loan. It's just somebody allows them to get what they want now, and then come back and see you down the road to put them in a better situation if warranted.
That's right. It's an overall plan for their future.
Yep. So there you go. That's kind of it. I think, and the nice thing about it, I mean, right now, your business, Chris, how much of your, let's say your 2018 volume, do you know offhand how much of that has been refinances of prior non-QM loans that have closed?
I would say,
put you on the spot. I didn't tell you I was going to ask you that question.
Yeah, it's okay. I know that about 35 to 40% of my business is initial non-QM. As far as those refinances go, I would say probably of that 35 to 40% of total volume, I'd say probably 5 to 8%. But the future seeds that I have planted for next year are certainly more than I have this year, because a lot of those people, were getting into non-QM in say 15 or 16 when people were ready to go ahead and commit to that type of lending. You had more, the economy was already improving at that point. Housing was getting a little better. And I had more people buying in, say, the 2016 year than I did in, say, the 14-15 year. So those future events. Go ahead.
No, you're good. Keep on.
Okay. I was going to say, so those future refinances, I have more of those lined up than I've actually been able to close this year. So the horizon certainly is going to be nice next year and the year after from what I have planned on those
So 35+%, more than a third of your business in this past year was non-QM. I want to make sure everybody heard that, because we get asked all the time, how big is the potential? What's the market potential? And we believe it's really big, especially with loan officers like you, Chris, that are using that to be an integral part of the business, not kind of a fallout, so to speak. You're to get that much business, you're doing more than just waiting for deals. You have to be out there, getting this in front of people, don't you? Is that part of your strategy?
Yeah, absolutely. I mean, not necessarily to get too granular in the type of what the specifics of the loans are, because I know we're going to speak to some of the scenarios that you wanted to discuss, but you do have to put yourself out there in front of varying referral partners, CPAs, I know we say that, financial advisors, real estate agents. But one of the really interesting things is when you start to do non-QM loans, you kind of become known for it. And it's not necessarily that, this loan's falling out here or falling out there. Let's call Chris or, refer that to an Angel Oak broker. It's, I know that this sounds hard from the beginning, because a lot of times your referral partners or the borrowers themselves know that they have an unusual circumstance because they've probably tried to get a loan in the last few years. So when that agent could be speaking to them and say, I don't know about financing, then you become that go-to person. And there's not really very much competition, if at all, once you get those calls, because those people, as I said in the beginning, you're kind of winning in the first place with them because they know that they're having difficulty finding loans elsewhere.
Yep. And you've positioned yourself as that expert. And so really what you're a big chunk, more than a third of your business in 2018. But what that's done is that's built your pipeline for 2019 and 2020 before we've even gotten there with these same borrowers.
Correct. With somebody that you've already earned that relationship with, that you don't have to generate a new client in the future or a new transaction. This is somebody you already have a relationship with. You're calling them 30 to 60 days before the refinance of that transaction, and it's a very simple process at that point.
Yep. Well, that's awesome. Good feedback there, Chris. Thank you for that. So, really, another question that we get regularly is just what does non-QM look like? I don't think it makes sense for us to spend time on guidelines and matrices and things like that, but really just understanding what kind of loans are out there is really kind of a key to me. And then, we put this together also to kind of show you not only the scenario, but kind of a strategy and how you generate that residual income. So we're looking at somebody who ran a casino, moving from New Jersey to the Southeast, had a vacation house that was underwater, and we've all heard this story. And so it went into short sale, June of 15. They applied for a loan later that year. So, you look at somebody who had a short sale in the summer and trying to buy a $1.2 million house before that year is over. That's a challenge. There's not a lot of products out there that can help that borrower get into their house. So this is, in fact, Chris, if I'm not mistaken, this was one of your loans that you closed, wasn't it?
It was. Yeah, that happened a few years ago, and the agent thought that they were referring a really good borrower. And once that referral came over to me, I pulled credit here. 710 FICO. You think, oh, this is a great borrower, right? Well, that's when you have to go dig deep into the credit report, and then you realize, wow, it was a short sale earlier this year, and that particular borrower, he made all of his payments on time. He never got behind, and he cooperated fully with the bank to short sell the home. But he never knew that if it short sold, that it was going to have an effect on him moving forward from a seasoning aspect of that. And in this circumstance, this was all news to him. So at that time when he thought he was going to be getting, sub 4% rate, and then we were looking at something higher, I can't remember the rate exactly. That was hard. That was a tough pill to swallow. But him being a businessman, he understood. All right, I can see if I walked out on one house, I could see where another lender is going to have a problem with this moving forward. And in his circumstance, we closed on a non-prime recent housing event, and we were able to do that just to kind of be particular because he never went late on that particular mortgage, which actually improved the underwrite. So right. We closed January 16, and the seasoning of that short sale is, I think, May. What we have on here, or June of next year. It'll be 4 years where we can actually take this conforming.
Yeah. So if you have that, kind of you're speaking to that pipeline that you have in the future. You're not going to wait until June, because June is when they're able to close. You're going to make that contact sooner than that, correct?
Correct. And I've made the contact about once or twice a year since then, just shooting him a quick email.
Right.
I remember this guy particularly because he was always in and out of meetings. He was always good on text. So considering he and I texted back and forth back then, just a few months ago, I dropped him a text, just, hey, how are things going for you and your family? I know we need to talk in the spring or something like that. He's replying back to me, hey, what are rates doing? Just that touch point, because when the text comes over to him, I know my name pops up. It's not a number he doesn't know.
Right. Yep. Awesome stuff. Okay. So then, that's obvious. You're going to be able to, I guess we've got March that you'll be able to refinance them, May, sorry. May, that's when you get to that seasoning where you can get the deal done.
Correct. And I'll probably reach out to him just after the first of the year just to remind him, hey, look, I'm going to be speaking to you in a few months. Because then that way you can start to you can remind him, hey, I told you I was going to reach out to you when the time was right for you to be able to turn this into a better loan for you and your family. You're not only reminding him that you're following up because you said you were going to do that, following up on a promise, if you will. you're also, kind of gauging the territory, because at that point you can kind of start to feel, what is his employment like? How much of the underwrite has changed since then? Are there positive things? Are there other things that have come up that we might need to work through? Is he still, let's say if it was he and his wife, and it wasn't in this example, let's say on a non-QM scenario, you had a husband-wife. Are they still married? Not to bring up a negative piece, but you want to make sure that the scenario hasn't changed much, or if it has, what you need to do to prepare yourself for that future underwriting.
And I'm sure it might go without saying, Chris, but I'd probably say it anyway. And I'm sure you emphasize to your borrowers the importance of paying their new mortgage on time.
Yes, that is something that you want to make crystal clear.
Yep. All right. Well, cool.
Hey guys, it's Frank here. I know there's so much that we can get into with these and the different scenarios, et cetera, but we are coming up on the bottom of the hour and we only have maybe 15, 20 minutes left. So just a friendly reminder to make sure we try to, move it along a little bit here. That's all. I didn't know you guys were aware of what our timing was. I just want to make sure we know.
Hey, Frank, any questions come through yet that you want to ask us, or you still coming through?
No, there's really everybody. No, everybody's just watching. I don't see any questions yet, so we'll just keep
All
going.
right, very good. Sounds good. Well, we'll keep moving then. So here's another one. A doctor and a family moving across country, had a short sale in 2012. Applied in June of 16. So that's obviously going to be agency fallout. It's not enough seasoning to get an agency loan. 705 purchase. And you can see there had five more months until school started and the new job. So time wasn't on their side. And then how to save the deal. And, I guess the Angel Oak name is known throughout the industry as doing these non-QM loans, especially when you've got a scenario like this that the borrower's just not going to ever qualify for an agency loan. So again, another 90%. So you closed it in July of 2016. Was this yours too as well, Chris?
Yeah, I think I did. Yes, I had some involvement on this, and I remember this. Even though this borrower could have waited, just a few months to close on the new home, she was actually in a bind because, as you can see on the middle there, she needed to go ahead and move here. She had a new job starting, I believe, in August, and she needed to get her children in school. So even though she knew that she wasn't able to get the best loan in, it was important for her to get the house that she fell in love with, knowing that, she would need to wait a year before she could refinance it. But she was okay with that and the extra expense.
Yep. And it looks like that was part of your refinance volume in 2018. So got her into a better loan after the seasoning requirements were met.
Right.
Okay. Awesome. We'll keep moving along. So here's another scenario. Really not a credit issues, but a FICO issue, 679. Below that, a 680 credit score. And for those that have maybe seen our webinars before, and Chris, you probably know this, but half the population in America has a FICO below 680. So if you don't have products and programs to work with borrowers with scores below 680, you only have a chance with half of Americans. So I think that's a pretty important statistic. And I think everybody wants to have as many, I think you said it earlier, as many tools in your tool belt as possible. And so having some non-QM products helps with that for sure. So September 17, so a little over a year ago, 800 purchase, good salary, good LTV, closed it in October, mid sixes, high sixes rate. Your follow-up was, hey, you're gonna have the right FICO score down the road. Shouldn't be too long. Pay your mortgage on time. Correct.
In this kind of scenario, I mean, sometimes you look at a 679, you think that's not too bad, but if you can see the purchase price on this at 828 at an 80% LTV, 679 is a tough credit score for a jumbo loan. And in his scenario, again, this was actually falling out from another lender. I got called on it. They said, "Hey, what can you do here?" And I said, "Well, I can do it, but I can't do anything about the credit, so we're going to have to go non-QM." He actually was buying, it was a condo, and it was a penthouse in Atlanta. And, he was in love with the place, and he just had to close on it. So I said, "All right, here's the plan. We're going to get this closed." Kind of a high stress situation because he and the seller was expecting to close sooner than they were able to. So in this became the hero for the borrower, for the seller, for the agent involved, and actually have acquired that agent now. I've gotten several more deals from her since then. And, we were able to refinance him into a better scenario once we got his credit in order.
So let's stay there for a second, Chris. Do you obviously leverage these products with realtors? I mean, do you let everybody know in a transaction that this is not going to be a Fannie Mae agency loan?
Yes, absolutely. And you kind of spoke to this earlier. Once you're known for non-QM, there's a lot of loan officers out there that do not know how to sell this or work it, particularly like on the bank statement loans, or they just don't know their guidelines very well. If you're going to sell non-QM, you have to know your seasoning guidelines for Chapter 7, Chapter 13, foreclosures, et cetera, and so on, to be able to prepare them for that refinance. Because if you can't give them the end goal, it's tough to sell them on what could be a more expensive loan in the meantime. But once, real estate agents, CPAs, financial advisors know that you can do these outside of the box type of programs, word spreads pretty quickly. And it gives you the opportunity to call on agents rather than just offering them the same conventional FHA Govy type loans that they can get elsewhere. You can remind them, "Hey, listen, I do things that other lenders don't do." And it's a different pitch because I doubt that very few of them have ever had that call. If you ever have something going south, give me a call. Or if you have that self-employed borrower that's having issues qualifying, let me take a look at it. I might have some alternative ideas that can turn that buyer into a homeowner.
Yep. Well, no, you make a really good point there. And I will say, as we get through this, I'm going to show everybody on this kind of some tools where you don't have to memorize these guidelines. We have things at your fingertips that will help you, and we're going to be there in just a minute. So make sure I talk about that when we get to Quick Quote. So anyway, best practices. Why don't you kind of talk about any best practices that you see or that you use in your business? You kind of touched on them a little bit. So anything else that you want to add here? But
yeah. I mean, I try to have a few different modes of communication with the referral partners I have and the ones that I'm calling on. I said earlier, text. Emails are great. Phone calls too. I leave messages. Oftentimes, your agents are busy. You might leave a message, and then if they don't return it, sometimes that kind of earns you a right to maybe give them a call later in the week or shoot them a text. "Hey, I left you a message." One of the things that I'm using right now is the Fannie Mae loan limits actually increasing next year. So with Fannie Mae's loan limits going up to 484 or so and change, that means that you're going to have buyers that can do a 95% purchase at a $500,000 sales price. So it's things like that where you're just, with a servant mentality, you're just informing them of the changes in the market. You're not necessarily just calling on agents asking, well, do you have any loans for me today? Borrowers.
So Chris, oh, sorry.
Go ahead.
I was just going to say, it just sounds to me when I'm listening to you talk, you stay on top of not only your future pipeline, but your past pipeline. It sounds like you look at the loans that you've closed this year on a regular basis to stay on top of future opportunities.
Correct.
Yeah.
Correct. And a lot of times that, one of the notes that I'll actually keep up with is like borrowers' football teams or baseball teams. And every now and then, if I see the Saints won or something like that by a short hair the other day, it's like some of the people that I have in my pipeline that I just want to reach out and touch, be like, "Oh, that was a close one." I sent that email out just a couple of days ago to a guy.
Right.
Annual client reviews. I email all of my database the month before the anniversary date of their closing, I'll shoot them an email saying, hey, listen, we closed you a year ago, 2 years ago, or whatever it may be. I'd love to have a few minutes to speak with you to make sure that you're still in the best loan program that suits your needs. I would say probably for every 10 to 12 emails I send, I'll have 2 people that want to have a conversation, but I'll probably have at least 8 of those 10 respond. No, we're good right now. I hope everything's well for you. We'll call you when you need you, but you're just letting them know, hey, I'm here to serve you.
Yeah,
it's
right. And out of sight, out of mind. So
correct. And then on the people that that may not be a portfolio or a non-QM deal that may not be a refinance now or at that annual client review, you can remind them, hey, listen, you're a year and 8 months away. In the meantime, if we need to speak, please don't hesitate to reach out. But you're just reminding them, I'm going to be calling you when the time comes.
Yep. All right. Awesome. Some other best practices I think we've talked a little bit about, but why don't you touch on that first bullet as far as the exit strategy itself?
Okay. Yeah. So the exit strategy, as I was saying before, you need to know, for instance, what your seasoning requirements are for conforming an FHA and VA for your Chapter 7, for your Chapter 13, short sales and foreclosures, because then you can actually help sell that in loan when they're actually signing the initial non-QM.
Right. Yep.
And that's one of the things you can set a calendar reminder when that's going to occur. For instance, like our gentleman next year, I'm going to reach out to him at the beginning of the year, even though he can't close until June. That'll give me time to warm up to him to prepare for that anticipated closing.
Yep. And then we have here we've already touched on it. We kind of jumped ahead, I guess, but the whole setting the calendar reminders. So whatever CRM or whatever tool you have, but the easiest and least technically advanced is just calendar reminders. Everybody has a calendar on their computer, whether it's Outlook or Google or whatever service you use, but you have calendars and use those reminders.
That's right.
So, all right.
That's right.
So let's move just a little bit. Where do you find these borrowers? Again, more than a third of your business is non-QM. So maybe just talk about some of, I'll just put a couple up here, and maybe you could just talk about what your strategies are to go find these borrowers through these referral sources.
Yeah. Well, I spoke to the realtor piece. One of the things that I've done in the past, though, too, is if you call let's say there's an office where you don't know many of the agents, but you want to offer non-QM services. If you call on the managing broker of the office and just say, hey, listen, and whether or not they have any affiliated type of relationships with lenders, if you start to have a relationship with them where you're calling on them, telling them, hey, listen, I can do some out-of-the-box type loans, that's always a great content. The reason is when you have newer agents or agents that are having problems with a buyer that's under contract, and let's say the loan's falling out at 1 or 2 other shops, they'll go to their managing broker. What would you do in this situation? Because that's a mentor to them. And there's several that I only talk to maybe once or twice a year, but it's because I've called on them in the past to say, hey, look, when your agents are having problems with a loan, let me take a look at it. And it can be for any number of reasons. It could be self-employed with income. It could be, bankruptcy, short sales, you name it. Same goes with other LOs. I know if anybody is affiliated with any type of banks, credit unions, or works with those guys, a lot of those guys can't do this non-QM lending, especially credit unions. I know in the area that I'm at. So I've called on some credit unions, and I'm kind of the go-to person if they ever have something that's falling out, because I'm not another bank that where I'm going to go after, that banking relationship. They know that I'm only looking to do the mortgage rather than, try to grab their banking business.
Yep. Sure.
And then builders and developers are the same thing. Even if you drop by some subdivisions and create a non-QM lender or something of the like, even though most builders do have affiliated partnerships with mortgage companies, they're not going to be able to do this type of lending a lot of times. And there's a builder specifically, the build that I work with, that's how I gained the preferred lender status with them, to where they're paying closing costs, I'm paying closing costs, was because I saved, or in 2015 or so, I saved about 3 or 4 big deals for them. And they came to me at the end of the year and said, hey, look, we'd like to talk to you Q1 the next year. And now that builder probably makes up about 20% of my pipeline.
Right. That's awesome. What about accountants, planners, those people in your efforts?
Specifically to the bank statement program that you guys have, where you need to get the CPA letter, not to get too granular on that. You end up speaking to a lot of accountants to help with that process for these borrowers. And then when they get it, wow, this person can't get a normal loan, and we know why, because of what they're showing on their tax returns doesn't really reflect what their true income is or what they cash flow. That opens the door for these accountants to understand the type of lending you guys provide. And so that certainly opens some doors. And then financial planners are the same way. It's just a different type of a referral partner. But a lot of times, they know if somebody has a complex situation that this person should be able to get a loan. They may know that they can't get it at a regular bank because of this or that. And then you become a resource for them as well.
Well, yeah, especially the accountants. We talk all the time on the bank statement loans. The accountants are generally the reason the borrowers can't get an agency loan because they're the ones, taking advantage of the tax laws. And to your point, if through our business bank statement product, you have to get just a CPA expense letter. And so you're having those conversations, and that's a great time to let them know the purpose and let them know to send you any other of their clients that are looking to buy a house. So awesome.
That's right.
Obviously bankruptcy attorneys, right? We're talking about stemming of these credit events, and nobody knows those better than the attorneys that are processing those.
Yeah. Bankruptcy attorneys, and something else though too that I've kind of discovered as a good resource though too in working with bankruptcy attorneys. A lot of those people going through bankruptcy end up having tax issues as well. And tax attorneys kind of work hand in hand with bankruptcy attorneys. And tax attorneys have now been a contact that I've been calling on. And are sometimes the tax attorneys are dealing with people that are a little bit further out from the credit event, such as a filed Chapter 7 or 13. And sometimes those referrals I'm actually to work with a little bit more immediately than with bankruptcy attorneys. But they're both a good resource.
Well, and I know, and as well, but tax liens that show up on our credit report, that's going to be a big ding on someone's credit score. So that could put them down into a product that they may not be aware it's going to be happening. So good stuff.
That's right.
All right,
and bankruptcy I was going to say this though too. Bankruptcies and tax attorneys, you're going to have no competition because there's nobody else in the mortgage business that's calling on those guys.
Right. Yeah, makes sense. So wanted to change real quick here, Chris, to our website. I mentioned earlier tools and things that are at your at your service. And I would say if you come away with a lot of what Chris has shared is awesome. Please remember our website. It's real simple, angeloakms.com. And if you go there, we have all the tools and resources, but I know we're getting a little short on time, and Frank doesn't like us to run over. So I'll just kind of run through this, but our most used feature on our website is there's two of them, and I'll show you real quick. One is Contact Angel Oak, Find an AE. So when you click Find an AE, no matter where you are in the country, every state that we're licensed in is highlighted or is there. And when you scroll over it highlights, and all you have to do is click on that, and it'll pull up the account executives and the markets that they cover. So you can find someone just by clicking a couple buttons. The other one that's probably used more than anything is right here. It's our quick quote. And you're going to see why we call it the quick quote. But when you go in, it's going to ask you for the name of your mortgage company. I had been in here a minute ago and I put in 123 Mortgage. But what we're looking for is if you're a lender, we have lender paid compensation and borrower paid compensation. So if you have a lender paid agreement through your company, it'll show up right here. But literally this takes you about 30 seconds or less. You just go in and you put in some data. So let's say I've got a borrower with a 700 credit score. They're looking for a jumbo 750 to $1 million loan. Let's say they have some money down that they want to put 25% down. And we'll just say, good housing history for the last 12 to 24 months. So you just click that, and you could see as soon as you answer that fourth question, options start to pop up. And you had mentioned, because you do so many of these, you're very aware of the Portfolio Select and Platinum, things like that. You really don't have to keep up with those. But there's comments here. So you ask for a 75, but for this borrower, you could get up to a 90% loan to value with no MI. So you could just go up here and change the LTV to 80. It'll just change right on the fly. You've got your rates. If you had lender paid, it would show you that as well. The other piece that's important, you had mentioned, Chris, was the seasoning. So we have bankruptcy and housing seasoning. So if you're 24 months out, you can see that that's going to work. If you know the borrower is less than 48 months, then Platinum would not work, but we have other options. And then if you're 12 months out, we have a non-prime product. So it's just kind of like it's that cascading option based on what that borrower scenario. You can change it from income doc from full doc to 12 months personal bank statements, same thing. You ask for an 80, but we'll do up to a 90 with no MI. Super, super useful, very easy. You don't have to be the expert. Let this tool be the expert for you. So this is a great thing. I mean, Chris, do you use this quick quote on a regular basis? My guess is yes.
Yes. I mean, this is one of those websites that's pretty much minimized all the time once I'm up and running every day.
Yep. Awesome. And then from there, you just click. So you see the loan, you want to do an 80% bank statement deal, pre-qualification request. You click it right there. You pull up your account executive. We have them all listed here. Put your information in, upload 1008, 1003 credit report, and then the bank statements. You actually upload the 12 bank statements right here. Any comments that you want to get, and you hit submit, and that goes directly to the account executive, and they're going to get back to you with the product and program and pricing of that borrower scenario. So once you use the quick quote to kind of just get an idea, maybe to have some initial conversations. But once you've gathered the other documents, you send it here, and within 24 hours, you're going to have something back in writing that you can take to the borrower and say, okay, here's the loan that we have that's going to get you in this house next month. And that's what's, again, it's ease of use. And everything that you need is right here. So again, angeloakms.com. Please use that, and that'll get you everything that you need to know. Broker packages, if you're not approved with us, you can just go right here and download the broker package and get going. I would probably recommend you start by contacting your AE, and then they'll walk you through the process. It's really simple, really easy, and all the resources are right here. So good stuff, Chris. Anything else that you think we maybe haven't covered, or we didn't touch on enough as far as how you use non-QM in your business?
Nothing comes to mind right now. I think we did a pretty good job, of kind of covering the different aspects of it. I would say, I know some of these products you guys may not necessarily know the ins and outs of the guidelines yet, but I would still, whenever you're doing your 30-second to minute elevator speech, throw out there, I do non-QM loans or portfolio loans. And, people then ask, oh, what's that? And then, tell them, well, these are loans that banks and other lenders can't or won't do. And then, somebody might tell you about a scenario that they couldn't get closed. And then, just reach out to your AEs, use the Angel Oak Mortgage Solutions team as a resource, because there's not a person over there that isn't going to try to help you close a scenario better than them. So.
Yep. Well, we appreciate that, Chris. And one thing, it looks like we got a couple more minutes. Frank, you jump in and cut us off if you've got questions are coming in. But this other thing, once you're approved with us, you can go to our website and actually log in, and this takes you to you'll have your own username and password. But once you log in, you have access to our marketing materials, and I want to show you that right here, our marketing portal. But we have all these presentations, all these flyers. You can see flyers here. But let's say the bank statement loan, you can click on it right here, the bank statement loan, and just all you have to do is modify it yourself, put in your information. It's not going to say anything about Angel Oak, and then it's yours to email out, to put on social media, however you want to use it, it's yours. So this Angel Oak Mortgage Solutions would be replaced by your logo. So that's something that is a huge benefit. And that again, kind of speaks to the going out and marketing for non-QM as opposed to waiting for it to come to you. So
good stuff. Yeah, so we did have some questions that popped up, but I hesitated to jump in and ask them because I knew it was going to get covered in this last final section, which it did. So
yeah,
everything.
awesome.
Just a couple quick ones. One is somebody's asking, how fast can Angel Oak Wholesale, turn something? How fast can you close?
Well, our average from start to finish closing time is about 22 days, but we've closed loans in 10, 11 days, and it really depends. We do about 85% purchases. So one thing that I'll say is we understand closing dates, fixed dates. So if the loan has been declined for an agency loan or something popped up later in the process, we know it still has to close on the 31st. So we really focus, everything that we do is really fast, and our customers tell us that on a regular basis. So 22 days is kind of the norm.
Okay. Of course, someone's asking, I'm a broker. Do you do broker loans? Yes, absolutely. That's what Angel Oak is all about. You become an approved broker and you can send them deals.
Sorry, should I answer that? Wholesale or correspondent that's what we do.
And then also wondering, is this all Angel Oak Mortgage Solutions does, or do they offer Fannie Freddie stuff as well?
Well, we've learned, we've been doing non-QM exclusively now for 5 years. So we believe that there's a lot of expertise required to close non-QM loans. And so we don't do agency or government loans. We do non-QM all day, every day. So everybody, as Chris mentioned, everybody in our organization, we kind of eat, sleep, and breathe this stuff. So no, we don't get sidetracked with any other type of loan.
Cool. There's really nothing else. I mean, there was a handful, but you answered them all on when you hit the website. So I'm sure that everybody saw that. And I was privately telling them, hang on, it's going to come up. You're going to see it. So I think we're cool there. Not a whole lot of questions this time. And again, you answered most of them already as you progressed along. So I think we're square. Over here. Now, I do want to say thanks to Chris for showing up and sharing, being vulnerable with us, and as an originator, just letting people know how you're kind of doing it. I hope the concept came across with respect to residual income for you guys. This is truly residual income. It's like, I'm doing a deal today that's going to be a deal for me 2 years from now, or a year and a half from now, or whatever the case may be. And so you got to kind of look at these non-QM deals with Angel Oak, because every one I'm putting in today is going to be another one for me down the road. And so if I get 10 in this month, I'm going to have 10 to deal with down the road. So it's the residual income aspect of this is genuine and true. And it is a matter of that follow-up process that Chris laid out for us there. It's just, you got to stay in touch and remember to get a hold of them when the time comes due. And they're going to want to get out of the deal. They're going to want to refinance and get into something different. It's money in your pocket. It is residual income in your pocket down the road, as long as you do your due diligence, which this is basic sales stuff, not asking you to do anything crazy or, get certified in any way or do, it's just, I got to remember to call these guys and get this deal done. That's what it's about. So with that, thanks, Chris. I really appreciate your time.
Yeah, thank you guys. It's an honor to be on the call with you guys.
All right. Well, I think we're cool. If everybody else is cool.
All right. Well,
yeah.
Good deal. Thanks, everybody. Again, happy holidays. And Chris, as Frank said, thanks very much for joining us. I think getting your perspective was extremely helpful.
All right. It's a pleasure, guys. I hope the audience can use some of those tactics and ideas.
Awesome.
I'm sure they will. All right, guys. Thanks so much for joining us, everybody, here at the National Real Estate Post and Angel Oak webinar series, ongoing webinar series. We'll be back again next month with something awesome. And until then, you guys have a great holiday, and we'll catch you all later.
I'm good.
Thanks, guys.